industrials. Meanwhile, the market is back in negative territory for the year, giving up gains from the recent rally. Christian Orejekwe, an analyst at Cordros Capital, joins me from the NSE for a market update. Thank you so much, Christian, for taking the time out to join us.
Thank you, Esther.
We're seeing the markets are slightly lower at midday trade today, and it appears this trend where the market goes up one day and falls the following day is here to stay, at least for now. But let me get your perspective. What does that say about how investors are trading this market?
I think investors are kind of being cautious. The market actually enjoyed some level of appreciation, at least in the last 1 month. There have been successive weeks of price gains, but at this point, if you look at the market, as a general look at the market, you could see some level of caution, 1 day gain and another day of loss, as we've seen week to date. But on the average, I think the market is still not doing badly. I mean, if you look at market breadth and over each day, I mean, it cruises in the positive territory really, even though the index closes in the negative.
Now, we've seen the industrial stocks in the spotlight lately. It's either the top on the gainers chart or top on the losers chart. And sometimes it's hard to gauge the sentiment, even though we know the individual stories surrounding some of these stocks like Dangote, WAPCO, and Ashaka Cement. But for you, what are your thoughts on how these stocks have been trading?
I think the industrials have been quite stable. The building materials in the subsector of that sector has actually been the major mover of activity within that area. If you look at the Ashaka and WAPCO, as at last week, they were trading very positively as a result of the news of the global merger that the Brent company is looking to do in Nigeria. But week to date, the stocks are actually trading negative. Danksem also lost yesterday, and these are the stocks that are actually impacting on the outlook for the sector. Danksem lost about 2.9% yesterday, and WAPCO is down week to date. Ashaka is also down week to date. So on the average, I think the sector itself is still positive. It's still an attractive sector. Just that the gains we've seen in the last week are kind of prompting investors to pick 1 or 2 profits on the stocks.
Okay, well, let's talk about bank stocks, for instance. Looking at your top picks going into the new week, before we look at overall market sentiment and perhaps the theme for this week, GT Bank. Starting with GT Bank, what are your thoughts in terms of the valuations of this stock and how investors will trade it in the new week?
If you look at valuations of banking stocks, I think my top pick is our First Bank at around 15 naira. We believe there's still a lot of upside potential for the bank, particularly when you take a look at what we saw as at the first quarter performance. Even though year on year performance wasn't very good, but if you take a look at the quarter-on-quarter performance, I think it's quite impressive. It gives an idea of what the bank is doing in recent time and what they're likely going to do when the second half result is out. Then for GTB and Access, I think for GTB particularly, the first quarter result was quite stable, and these are banks that have maintained some consistent level of interim dividend payment, at least in the last couple of years. So I think there's going to be a lot of flashlights on those stocks going into the new year, particularly as the first half of the year is about to end, and in the months of July, August, we're likely going to see their numbers coming out. So
okay, now Christian, but before we go into your other top picks, you talked about GT Bank and Axis Bank. Now, for these 2 stocks individually, what would you recommend, buy or hold?
I think I would recommend a buy for an Access, and I recommend a hold for GT. GT has actually, there's been a lot of demand for GT in recent times. It's been about 30-something naira. I think the upside potential is quite limited at this point. But for Access is doing about 9+. I think Access still has the potential to do about 11.50 as well. So I think Access is the buy for me and GT is the hold.
Okay, let's talk about Honeywell from the food sector. Some expansion of fresh capital raising, some sort coming out from that company. So obviously, good things ahead for Honeywell in terms of expansion, in terms of strengthening their bottom line. What are your thoughts?
Honeywell is a buy for me. If you look at the flour milling industry, it's an attractive industry. Demand for their products is quite massive. Flour mill has been very active in recent time in terms of expansion. Currently has about 2,610 metric tons per day capacity. That's about the third in the industry. In terms of market size, the company is improving. It used to be about the third in the market, but in recent time, we've even taken over a significant market share from Dangote Flour. So that means that outside flour mill of Nigeria, Honeywell, I think, is the next big player in that market. So Honeywell, I mean, if you even look at the performance at least in the first 9 months of the year, I mean, earnings were up in double digits, revenues also up in double digits. We're expecting the number for the full year is only due for release. Any moment from now, we expect the numbers to be released, and we also expect, the performance we saw in the last 9 months to also continue, in the last quarter of the year. We also expect a dividend payment that should, produce a yield of, not less than 5%. So I think the outlook for the company is strong, and I give a strong, buy recommendation for the stock.
Now, Christian, still on Honeywell, what about how government policies have been affecting companies like Honeywell that deal in wheat? I know that some policies aimed at reducing the importation of of wheat and focusing on cassava flour here. We haven't heard much about that, but what are your thoughts?
Exactly. Government has actually increased the tariff on wheat importation, as part of its policy to encourage a mix of cassava flour with wheat in flour production. And what that has seen, what we have seen as a result of that in recent times is that we realized that the cost of sales for these flour milling companies is quite significant, across the industry really. If you look at the cost of sales margin, it's about on average over 80%, and that's really cutting into their margin. But the very interesting thing, for the likes of Honeywell flour mill is, like I said, as capacity increases and the company is able to increase its market size, we expect the revenue to grow over and above the cost of sales. And with some cost optimization strategy that the management has embarked on in recent times, so we expect that going forward they will have the opportunity, to be able to weather some of those storms, the impact of the government regulation. And from the discussion with the management, they are also complying with the government directive of cassava inclusion in their flour. Already they're doing about 2 to 3%. In December they're looking to do about 5%. And as the years go on, they're looking to increase mixture to about 10%. So as they do that, what that means is they're likely to have more cassava mix in their wheat flour, so demand for wheat is going to go down. So and that can also help to reduce the cost of sales and
okay, more cassava flour for us. So let's talk about PZ from the consumer goods space. What do you recommend? Buy, hold, and of course, what the fundamentals that support the stock are?
Well, in the medium term, really, I give a hold recommendation for PZ. But in the longer term, I think it's a stock that is very good to have in a balanced portfolio, really. If you look at the sector that the stock plays, the consumer goods sector, PZ has a lot of attractive products that are selling massively in the market. There is significant demand for the company's stock. It's in the same industry with Unilever, but if you look at the way the stock has performed recently and vis-a-vis Unilever, you see a significant improvement in performance. As of 9 months result, earnings were still positive, about double-digit earnings growth. They did the same thing in the last year. They paid attractive dividend in recent time. They are most likely going to pay a final dividend. So I think within the medium time, PZ is a hold. Even though if you do a technical analysis of the stock price, it's been quite static, even around that 36 naira region. But I think it's a stock to hold in a mixed
in the medium term. Okay, well, let's quickly talk about Transcorp. Heavy crossings seen in this stock lately, but during those crossings it was actually a sell-off. But we know that this stock still has some strong fundamentals. What are your thoughts in terms of how the kind of sentiments that investors have towards Transcorp?
I think for me, Transcorp is a very volatile stock. If we look at the way the stock performed last year, it's one of the top gainers last year. A lot of people are actually holding, Transcorp at, prices that are far ahead of what it's trading today. And I think, I see very limited options of the stock, going up, because any opportunity that investors have, they are, going to exit on the stock. So, and I think my outlook for Transcorp is quite cautious.
Cautious for now. Okay, let's hear your forecast for trading in the new week. It's been a seesaw at the market this week. One day of gain, the following day the market investors rushing to take profit. Do you think this trend will continue in the new week? And what do you think could break in terms of perhaps something different or some kind of catalyst coming into market to turn things around?
Okay, at this point, there's really no expected catalyst that's going to create a significant buy across the market. In the new week, also expect more of some cautious trading. But the most important thing is that as it is now, the outlook for the market is still positive. The market is still very strong. I mean, corporate performances, like we saw in the first quarter, are not bad, and as the first half of the year, comes to an end, we expect companies to also release results that are not too bad. Macro-wise, there are currently no tension. I mean, the foreign reserve is still within, has not suffered any major depletion in recent time. The exchange rate is still very positive. Foreign investors are still much interested in the market.
Christian, I'm afraid we're going to have to leave it there. Thank you so much for giving us that update on trading at the Nigerian equities markets. Christian Orejekwe, analyst at Cordros Capital.